I'm delighted to be joined by Jeremy Martin, who is the CEO of Horizonte Minerals. Now, Horizonte Minerals is an exciting dual-listed AIM and TSX nickel company that's developing two 100% owned Tier 1 assets in Brazil. The Araguaia Nickel Project, where construction started this year, and first nickel is on schedule for Q1 in 2024. And the Vermelho Nickel Cobalt Project, which has a feasibility study underway. So a world-class portfolio in an established mining jurisdiction, targeting initial production of 29 kilotons per annum, which will increase to 60 kilotons per annum, with exposures to robust stainless steel and high-growth battery markets. So, Jeremy, good morning.
Scott, good to be here again.
Jeremy, recently you announced results of an oversubscribed £70.5 million fundraise, having provided progress update at Araguaia. Firstly, can we discuss what you've been up to at Araguaia?
Yeah, absolutely. Look, we've had a very busy 2022. We obviously closed the project financing in January. We approved the project at the end of January, and we actually broke ground in mid-May. So it's been a fairly rapid sort of evolution into construction. As we sit today, we're about 16% progressed on overall construction, over 70% engineering complete. We've got all the key earthworks complete across the process plant site. We're currently pouring foundations for the furnace. We've got all of the long lead items on order, and actually, excitingly, the furnace base shell arrived on site this week. All of the ancillary work, the power line, the water cooling dam is advancing. And we're also about to start work on engineering on the second line. So it's been a very busy 4 months from really hitting site in May.
So I suppose the question is, why the fundraise now, Jeremy?
Yeah, look, that's an important point. This is predominantly driven around the way the debt package is structured. Obviously, we announced the full financing package for the project, but it's split into two components, the equity component and the debt component. And the way these integrated project finance packages work, you have to spend the equity first, and then you can draw the debt down. And what happens is you have to run through a cost to complete test, and that is where the lenders, their independent engineer, looks at the whole execution schedule. And bear in mind, this is 24 months of build and 12 months of ramp up. And they have to deem that you've got full financing to take you through that complete process. Now, as a function of the inflation that we've seen in Brazil, obviously, when we approved the project in 21, global inflation rates were significantly lower than they are today. We've seen inflation in Brazil pass over 12.5% this year. Obviously, the situation in Ukraine has meant that a lot of commodity inputs have gone up. We've seen steel prices go up. In Brazil, we've seen diesel prices go up. And all of that has meant that the overall cost of the project is greater than it was when we approved it in late 21. So as a function of that, and to pass this cost to complete test with lenders, we've been required to close this equity gap. And that's why the fundraise was driven now. Obviously, look, markets are very challenging. This would not have been the opportune time to do this fundraise, but I'm very pleased it was very successfully closed. But it was down to that requirement for the lenders to pass that cost to complete test on the debt.
Now, obviously, as you said, it's a challenging time, but how much did you raise?
So we had a target of $70 million. Due to the significant demand, we made a decision to upsize that to $80 million. And the rationale behind that is, look, we've had some unprecedented conditions in the market over the last 8 months. We've still got 24 months to go before we're fully ramped up. And obviously, we wanted to ensure that we had sufficient buffer, that if we were to have any other sort of unexpected events in the market, we've got that flexibility. And also that additional 10 million will allow us to really move forwards, as I said, on that second line with the engineering on line 2, with the objective of taking us up to that 29,000 tons of annual nickel production.
It's obviously tremendous to get that $80 million US. What will it be used for?
So yeah, we sort of touched on a couple of areas. I mean, it will predominantly be used as part of the overall construction financing. It will allow us to ensure that obviously all those key costs that we have seen increase are covered. I mean, just to give you an example, in Brazil, concrete has gone up 300% in price in the last 12 months. And obviously, clearly that wasn't factored into our original models. So it's predominantly used to complete the build of Araguaia. It will allow us, as I say, to accelerate that engineering on line 2. We'll be doing an updated AAC Class 3 cost estimate, the basic engineering, and also we're actually going to start site preparation as well while we've got contractors on site. So that's the key use of proceeds.
And Jeremy, why was the money raised at a discount of 9% share price?
So I think, look, nobody wants to raise money at a discount. And obviously, I will come back to, we have had a very, very challenging market, especially as we've seen over the last 2 weeks around some of the kind of activity that's come out of the UK government. So this is not a normal market environment that we're in. We looked at around 25 deals that have been completed to date across the UK, the TSX and the ASX. That's pretty much the number of fundraisers in the mining space year to date. The average discount across those deals was 12%. And some of those deals actually saw greater than 20% discount. So I think, look, to achieve a fundraise of this sort of magnitude, $80 million, it is going to require a discount. And we believe that a 9% discount was a good outcome against the current backdrop we're seeing in the market.
And did any of the directors participate?
Yes, myself and Simon Retta, the CFO, we both participated with £30,000 each.
I suppose one of the questions is this all the money that you need, or are you going to have to raise further money in future for Araguaia?
Look, I think this is a question we're being asked, and obviously that the people that committed the money were also very heavily focused on that question. I think you have to look at where we're at today. We've got $375 million of commitments already locked in place on the project. The engineering is 70% complete, whereas when we started in January, you were starting engineering. And as you evolve through engineering, there are natural evolutions to materials and costs, etc., that come out of that process. So where we sit today with the level of confidence that we've got in the engineering, the fact the project is at foundation stage, i.e. you're out of the ground, which is one of the hardest parts of a build, with that level of cost commitment already under our belts, we're confident that this financing will see us all the way through to commercial production. The caveat is always, look, some of the things that come at us we can't predict, but as we stand today, this fully takes us through to commercial production.
And why was there no retail offering, Jeremy?
Yeah, again, this is always another area that we focus hard on. Unfortunately, in this instance, our hands were somewhat tied. There is an article under the prospectus regulation, Article 3.2, which relates to retail offerings. And some of your viewers may recall that as part of the original fundraise, we had a retail offering through one of the sort of platforms that's available. And because we'd used those headroom rights within the 12 months, we weren't able to offer another offering to retail. We were very frustrated about that. We looked at lots of different options. And unfortunately, in this situation, there just wasn't the ability to do it with the accelerated book build in the overnight scenario. So, yeah, one of those challenging situations.
Obviously, Araguaia has been a focus of the news flow. Maybe before you go, you could briefly update us on Vermelho.
Yeah, look, Vermelho, as we've talked about before, is one of the highest grade undeveloped nickel cobalt projects out there in the world today. We see this as a major value driver as part of the Horizonte story. It's how we go from 29,000 tons of nickel to that 60,000 tons of nickel target. If we look at the economics on Vermelho today, at today's nickel price, it's got an NPV of $3.4 billion, and it generates over $13 billion of free cash flow. I mean, we've had inbound interest over the last 6 months from OEMs and battery manufacturers, so we clearly know that this is the right product for the market. We are advanced on the feasibility study. We've got drill rig mobilized to site. The environmental and social work streams are well advanced, and you'll see an announcement out soon about the award of the main contract on the feasibility study. So absolutely, it's moving forwards, and it's a key part of the story.
Well, Jeremy, it's exciting times ahead for Horizonte. Thanks for your time today.
Thank you very much.